NTFX weekly market insights, where we look at the forecast, the market for the upcoming weeks, and how to position ourselves to capitalize on the opportunity that comes our way. But first and foremost, I want us to look at the calendar, the news calendar for the upcoming week. Okay, let's look at the news calendar. That's Forex Factory. Let's look at Forex Factory on Monday the 27th. You have bank holiday, New Zealand and Australia. On Tuesday, you have Bank of Japan, bank rate, monetary policy statement, and the BOJ policy rate. Take note of that if you trade USD JPY. On Wednesday, you have CPI for AUD and bank rate for Canada and the FOMC for US. All right, but all this is expected to remain unchanged, even though there is acceleration of inflation in recent times, occasioned by the rising cost of energy due to US-Iran war that caused closure of Strait of Hormuz. But nevertheless, that is not enough reason for monetary authority to keep increasing rates. All right, they have to watch. What if they increase rates today and the war comes to an end next week? All right, are they going to reverse themselves? Of course, no. On Thursday, you have GBP monetary policy rate. Official bank rate will be out. It's expected to remain at 3.75. All right, and then you have advanced GDP for USD. That's on Thursday too. And then on Friday, basically, you have nothing. So take note of some of these red folder news. And if you go to NTFX trading.com, you will see the session on fundamental analysis, where you can learn how to interpret some of these red folder news. All right, so let's go back to the chart and find out what is to come for the week ahead. Go back to the chart. All right, so we start from DXY to know what will happen for the week ahead. If you look at weekly time frame, I'm also looking at a situation where this structure on weekly is complete, but there's still possibility of this liquidity taking before we move to the upside. But in the interim, we have to take it as it comes. So assuming it's not going to come to take that level, then what should we expect? All right, what should we expect? What we should expect is simple. Right here, you have a push to the upside. All right, so what I will expect is that there should be a corrective structure right here. If I can get this minimally to this level, I'll buy. You know, I will expect a buy of a dollar to the upside. Then euro dollar, of course, you know that euro dollar will do the opposite of DXY. Okay, to do the opposite of DXY, we're expecting a push up on DXY, then we should expect a push down from euro dollar. But if you're expecting a push down from euro dollar, and after this drop down, you have this pullback. This is not a corrective structure, it's a pullback. You have this drop down. If you are having this, what you can see in order to ensure completion of the bearish structure are just two things. You see that you see corrective structure here to break this low, and this one comes to the top, and then you have a drop down. This is a complete, what do you call it, expanding flat corrective structure. Then you drop down. You see that, or alternatively, you can have this move come up to the upside and drop down here, where you have this corrective structure in the middle. So this is a running flat and this drop down. So this is what we are expecting on Euro USD. Alternatively, you can also have a corrective structure here. You can trade this upside and then this drop down. You can also trade it. This is what we're expecting from euro dollar. From pound dollar, For pound dollar, it's very simple. Immediately we saw this structure, this drop down, this liquidity sweep. You have the upside, you have this corrective structure, break this low. We want this to the upside. From this level, we don't want to miss this downside. I've given this setup right from Monday when it was still here. I've forecasted that it should break to the upside before we sell. And you can see it from our Telegram group. You can see this is what do you call it, GBPUSD. Can you see it? It has to go up here before we sell. All right, if it doesn't go up that way, there is no sell that is to come. No sell that is to come. You can see right here, I have to put this cross. That is, here is no for me. Do not sell here. There's no liquidity here. This has to come up here before we can sell. That is how it is, guys. Okay, that's what you get when you join our mentorship program. You get to see all these alternatives. Okay, then you also see BTC. We also give idea on BTC, that right here, can you see corrective structure upside? And then what do you see here? Can you see corrective structure upside is complete? And then the crazy one is right here, Euro GBP. Can you see? It's a simple corrective structure. All right here, push down, 3 wave up, 3 wave down, corrective structure, break this one, that's expanding flat, this one drop down. Can you see the simple analysis? If you want to understand how to do basic market forecasting, very soon the course will be ready on ntfxtrading.com, and you can see the result. Can you see it? TP hit. This is about 1 to 9 risk to reward ratio. Okay, that means if you invest $100 on this one, you get $900. That's how it goes, guys. So let's go back to the chart and see what we are to expect this week. DXY, just as we said, I will expect DXY to make a corrective structure and then I'll buy. Okay, it's a buy trade for me. It's not going to push to the downside, but you must allow it to make a complete corrective structure. Right now, it's just the A part of corrective structure that is developing. Allow the B wave to happen, allow the C wave to happen before you buy. That is a complete corrective structure. All right, for euro dollar, I think we have done euro dollar. Okay, we have done all this. We have done pound dollar. I've showed you from the group what we're expecting. What we're expecting for pound dollar, we have to break this top right here. From here, we drop down. Okay, for AUDUSD, similar structure. I've encouraged people not to trade pullback. If you have a drop down here, this is a pullback. This is not a complete corrective structure. You can't trade this. If you want to trade this, you have the headache of having to contend with the number of times the market will be moving up and down, moving up and down. It's coming down, going up, coming down, going up. You have headache because that is not your trade. That is not where your trade is, and that's what you get when you are trading a pullback. For you to trade here, you are trading demand and supply, support and resistance. You will trade this and you have headache. All right, so that is not for you to trade. So what you are to trade is after you see this drop down, you see this impulse, these are just mere corrective structure. Break this low, this one has to come break this top. This will now give you a complete corrective structure. From this level, you have a psychological level there. Oh yes, from 0.7200, 7200, around that level, you should have a drop down to the downside. Okay, for AUDUSD, drop down to the downside. Minimally to around this level, you should come around this level. Usually I project this impulse, okay, and I target minimum minus 0.727, minus 0.27, this level. That this level or this level, that will be your target for AUDUSD. Take note, guys. USD CARD. All right. If you look at it from the weekly time frame, you see that USD CARD is to make a push to the downside, is bearish, but for you to sell it, you know, structure is king. You have to see an impulse, see a correction before you sell. But look at it, you see we caught this one, you see the impulse, push up with A, with B, push up, expanding flat, we sold. Can you see expanding flat, we sold. After we sold, you see this is just a pullback, this is not a corrective structure. You see a drop down, this is a pullback, it's not a corrective structure. Since you have impulse, you have impulse. It makes sense for you to have impulse and impulse. If corrective structure does not follow, you will not be able to know or understand the next move that the market is about to make. Right now, you have a corrective structure, you need another impulse. So once this impulse comes down, look for your buy for this push to the upside. It has to push up. After the push up, then you have a complete corrective structure. From here, you can sell to the downside. All right, you can sell from here to the downside. That's how it works. Okay, wave by wave, you can forecast the market. You know, there are many methodologies you can use in trading this market. All right, but it is special for you to forecast the market with wave analysis. Wave analysis is the best method for market forecasting. After you have forecast the market, you can now begin to use the concept of inducement, liquidity, demand and supply to now understand where to get in to the market and obtain a very good risk to reward ratio. Good. From this good, you will see that after this market drop down, of course, after it dropped down this corrective structure and broke here. From here on the group, we made it clear that we should be looking for a move to the upside. You know, I'm going to show you on the Telegram group. On the Telegram group, where we opted to start buying gold to the upside. You get it soon, guys. So that is the beauty of having the knowledge of what we are doing here, guys. We are not playing. You know, once you understand market structure, you understand everything. Can you see, guys? Can you see? This is the message to the group. From tomorrow or Wednesday, we should see confirmation to start buying gold. Can you see it here, guys? Can you see it here? Upside. That's how it is, guys. Go back to it. Can you see? From here, you will have double your account. Buy gold. But right now, the movement to the upside is not too fantastic. All right? The movement to the upside is not too fantastic. It's losing momentum. And how do you know? Can you see right here? You have upside, upside, upside. Higher high there. What do you see here? Lower high. The momentum is dying. So because of that, we want to see a big pullback before any upside or even continuation to the downside. And what do you see here? You see 3 wave down. You see this with A. So you need to see this, break this low, and come up again for you to have expanding flat. That's what we want to have here. From this level, we have a move to the downside for good. At least we should have this downside for now. After this downside, we now decide on what structure, what next the structure we want to see. USD JPY. All right. If you look at USD JPY on the weekly time frame, you see that it's right at the top. You know, it is not right to start looking for buy setup after this move. You need to consider the equality of waves. All right, equality of wave. That's what you use to judge where you are on the chart. All right, look at these waves, they're almost the same. And if you have this one already push up, all right, already push up here, then where are you? This is where the starting point, the ending point. Okay, ending point, starting point, ending point, starting point. So right here, you are at the top of the wave. You cannot be looking for buy setup right here at the top. So you have to look for sell setup. And how do you get the sell setup? Right here, you will see that right here you have impulse, impulse. You can't decide anything after seeing impulse and impulse. You need to see correction. Look at it, corrective structure. Now you can understand that if you see this wave here, if you see it right here, you are ready to drop down to the downside. That's how it goes. That's how we forecast the market. Do you understand? So left for me, if this market takes this liquidity, then it's ready to go. I would like the market to do one more upside, take this liquidity and drop. Don't miss this drop, guys. Don't miss this drop. It's going to drop from here. All right, then you go to lower time frame, like 30 minutes. Right here, you see structure, corrective structure, you sell. All right, until you break this low. That's it about USD JPY, guys. So simple. Okay, BTC. All right, BTC, we did give the setup here that right here we should begin to look for our downside, because you have complete corrective structure here, you have 3-wave up here, and you have our impulse here. Any moment from now, we should either have a big corrective structure for more upside, or we should have the market moving to the downside. That's for BTC. I've already given this setup in our mentorship group, that we should look for sell from here to the downside. Why? Anytime market want to reverse, instead of it to, after a push up, instead of it to give a corrective structure, you just give a pullback. If you break it again and you see a divergence, you know that the market has lost steam to the upside. Can you see? You see the high, you see the high here, you see the higher high here, you see the high here, you see the lower high here. This is divergence. So once you see this divergence, you have to look for your downside. All right, look for your downside. Is that okay now, guys? So what if the market doesn't want to give me the downside? What do I need to see? Then give me corrective structure. You have the impulse, you have the pullback. If you have the impulse, then you have impulse, which is the A wave, corrective structure, drop down, then we buy again. It's as simple as that. It's as simple as that, guys. This level, we buy again to the upside. So when you are analyzing the market, you don't get fixated at a particular direction. You need to see the structure the market is giving you. See the structure and follow the structure accordingly. All right, NAS100, you know very well. Right here, you see on the weekly time frame, what a fantastic corrective structure it has given you. Right here, you see, give you expanded flat, upside. Give you regular flat, upside. If you want to have idea about how to use wave analysis to forecast the market, a course is almost ready. Will soon be uploaded to www.ntfxtrading.com. You go there, you'll be able to have access to the course. It's almost ready, guys. So right now, what do we expect? NAS100 is bullish. Right now, the stock market is bullish in the US. All right. So what do we need to check? Right here, you have corrective structure. Look at it. You have corrective structure. In every corrective structure, with A is the same. Okay. You see a drop down with a gap. You see corrective structure to the upside, and you see wave C drop down. This is a running flat to the upside. This is a regular flat to the upside. Right here, lower time frame, look for buy. Lower time frame, look for buy. At this level, should we get involved? Should we get involved? No, until we see another corrective structure. And how will that corrective structure develop? I told you, when the corrective structure is developing, you see with A is sharp, you see with B is sluggish, and then with C is sharp. From here, you buy from this level to the upside. That is how to use corrective structure to our advantage. Then US oil. Last but not the least, US oil. This US oil, what I want is, of course, right now, the Strait of Hormuz still remain closed. Nobody knows what will happen next. But for now, I want to see corrective structure right here and buy to the upside. This being our impulse, because right here you have the impulse, 3-wave to the upside. This one has come to take this low. Okay, so this is a complete corrective structure for me. And for now, the forecast is to the upside, provided that I can see corrective structure here. Okay, corrective structure here. From here, you can buy to the upside. If we get to we tap this high, then we'll see whatever happens, whether we'll still have more upside or we'll continue to go to the upside. How will you know that, guys? How do we know? If you are going to have more upside, then you have another corrective structure here, more upside. But if you are going to have downside, you are not going to have it sluggish here. You are going to have a drop down, corrective structure, another drop down. That is how you analyze the market, guys, bit by bit. In times of uncertainty in the market, you do not depend on any other thing apart from the available or relevant fundamental analysis and the structure that the market is preparing before you. You follow the structure to the letter. You do not overtrade. You do not over leverage. Okay, whatever the forecast we're able to do for you here on this channel, rest assured that 80 to 90% of it will be inch perfect. It's not by luck, it's not by chance. You can see how I've showed you the before and after from my mentorship group. When we forecast the market, we meet it like that. All right, and we are correct 80 to 90% of the time. That is the power of knowledge. You cannot achieve it overnight except you practice. Get the knowledge and practice. Get the knowledge and practice. When you make mistake, correct yourself. Make sure that you do not lose hope. If you have been losing, you have found the right channel where you learn how to trade the market the right way. All right, and all I just want you to do to reciprocate this free gesture is just to share the channel, to like it, and to subscribe to it and follow us, so that whatever we drop, any new video, you'll be the first to see it. See you next week, guys. Have a lovely day. Bye.